Here are the crypto top headlines covered in this video. SEC pushes deadline for decision on Invesco, Galaxy, Spot Ether ETF to 2024. Next, I'm a big fan. Cantor Fitzgerald CEO praises Tether and Bitcoin. Also, Bitcoin price pumps as Dovish Fed signals 3 rate cuts in 2024. Where next for BTC? Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: SEC pushes deadline for decision on Invesco, Galaxy, Spot Ether ETF to 2024. The Commission had until December 23rd to decide or punt on approval or disapproval for the Spot crypto investment vehicle. The United States Securities and Exchange Commission has delayed its decision on whether to approve or disapprove a Spot Ether exchange-traded fund, or ETF, proposed by Invesco and Galaxy Digital. In a December 13th notice, the SEC said it would designate a longer period on whether to approve or disapprove a proposed rule change that would allow the CBOE BZX exchange to list and trade shares of the Invesco Galaxy Ethereum ETF. The proposed Spot crypto investment vehicle is one of many being considered by the Commission, which to date has never approved an ETF with direct exposure to Bitcoin or other cryptocurrencies. The 45th day after publication of the notice for this proposed rule change is December 23, 2023. The Commission is extending this 45-day time period, said the December 13th notice. The Commission designates February 6, 2024 as the date by which the Commission shall either approve or disapprove or institute proceedings to determine whether to disapprove the proposed rule change. Invesco and Galaxy Digital filed the Spot ETH ETF application in September after it had reactivated its application for a Spot Bitcoin ETF in June. Some experts have speculated that should the SEC decide to eventually approve a Spot crypto ETF, whether it includes Bitcoin or Ether, it could move forward with simultaneous approvals of funds from multiple firms. At the time of publication, applications from firms on Spot crypto ETFs included BlackRock, Hashdex, ARK 21 Shares, Van Eck, and Fidelity. Memos released by the SEC over the last 30 days showed some asset managers' representatives met with Commission officials to discuss the ETF offerings. Our next top headline: I'm a big fan. Cantor Fitzgerald CEO praises Tether and Bitcoin. Cantor Fitzgerald has been managing Tether's now $90 billion treasury portfolio since late 2021. Howard Lutnick, the CEO of Wall Street firm Cantor Fitzgerald, has praised USDT stablecoin issuer Tether, describing himself as a big fan of the firm. I'm a big fan of this stablecoin called Tether. I hold their treasuries, so I keep their treasuries, and they have a lot of treasuries, Lutnick said in a December 11th interview with CNBC. They're over $90 billion now, so I'm a big fan of Tether, the Cantor Fitzgerald CEO said. Cantor Fitzgerald has been helping manage Tether's multi-billion-dollar United States Treasury portfolio for several years, despite many Wall Street firms shying away from crypto businesses, particularly after the Silicon Valley bank crash. A February 10th report from the Wall Street Journal said the partnership between Cantor and Tether began in late 2021 citing anonymous sources familiar with the matter. Cantor Fitzgerald is one of a few brokerage firms that can trade treasury bonds, along with Charles Schwab, Fidelity, and Vanguard. Other large financial institutions have been reluctant to provide services to Tether. Wells Fargo stopped processing Tether's wire transfers as a correspondent for its Taiwanese accounts in 2017. Despite being the largest stablecoin by market cap, Tether continues to be called out for its lack of transparency regarding its reserves. It recently performed poorly in S&P Global's Stablecoin Stability Assessment, with the second lowest ranking out of 8 US dollar-pegged stablecoins. The assessment factored in the firm's management of assets, audits, risk appetite, primary market redeemability, secondary market payment rails, and track record with maintaining its US dollar peg. Despite the wariness around its long-term stability, Lutnick suggested Tether could benefit currency-collapsing countries like Argentina, where its new Bitcoin-friendly president, Javier Milei, has pledged to abolish the country's central bank and transition to the US dollar. Similar ideas were echoed by James Check, lead on-chain analyst at blockchain analytics firm Glassnode, who referred to Tether as the CBDC that will be controlled by the United States but could also be increasingly relied on by developing countries looking to dollarize. Lutnick likes Bitcoin too. The CEO initially claimed that he was a fan of crypto, but then backtracked to offer more specific praise for Bitcoin. These other coins, they're not a thing. They're kind of make-believe. Maybe Ethereum is okay. Lutnick referred to Bitcoin's halving cycles and lack of a centralized entity as two main reasons he sees value in holding it. The only asset people could have held where no one could take it. Bitcoin. It is uncontrollable, Lutnick said. With Tether, you can call Tether and they'll freeze it. With Ethereum, you can call Joe Lubin. Our next top headline, Bitcoin price pumps as dovish Fed signals 3 rate cuts in 2024. Where next for BTC? The Bitcoin price is pumping on Wednesday amid a dovish reaction across traditional asset markets to the U.S. Federal Reserve's latest policy announcement. BTC was last up 3.2% on the day and trading in the upper 42,000s, with bulls eyeing a near-term retest of yearly highs printed earlier in the month in the upper 44,000s. As expected, the Fed left interest rates on hold at the multi-decade high level of 5.25 to 5.5% on Wednesday. Fed forecasts slowing inflation, easing growth, softening labor market, room for rate cuts. But the central bank's quarterly economic and interest rate projections showed that the bank expects inflation to continue falling next year, giving them the room to start cutting interest rates. More specifically, the Fed forecast personal consumption inflation, or PCE, inflation to drop to 2.8% by the end of this year and 2.4% by the end of 2024, not far above its 2.0% inflation target. Meanwhile, forecast a continued slowdown in the economy from a 2.6% growth rate in 2023 to a 1.4% growth rate in 2024 and a slight further softening of the labor market to an unemployment rate of 4.1% versus the current 3.7% rate. As per the latest dot plot, a summary of each individual Fed policymaker's expectations as to where interest rates will be in the coming years, slowing inflation, easing growth, and a softening labor market will give the central bank room to start cutting interest rates next year. The medium policymaker projection forecast 3 25 bips rate cuts by the end of 2024, while no policymakers forecast higher interest rates. Fed announcement pumps easing bets. From a financial and crypto market perspective, the latest Fed policy announcement fed into the narrative that easier U.S. financial conditions and more liquidity lay ahead, explaining drop in U.S. yields, the U.S. dollar, and the pump in liquidity-sensitive U.S. stocks and crypto. The CME's FedWatch tool, which monitors U.S. interest rate futures markets to gauge the implied probability of future interest rate moves, last had the chances that the Fed starts cutting interest rates in March at close to 75%, up from closer to 40% one day ago. Interest rate futures markets now also imply a more than 60% chance that the Fed will have cut interest rates by at least 150 bips by the end of 2024, up from around 20% one day ago. Where next for the Bitcoin BTC price? At current price levels in the 42,800s, Bitcoin is now close to having retraced 50% of its most recent mini pullback from the yearly highs it hit on the 8th of December, around 44,700. Analysts widely attributed that pullback, most of which occurred on Monday the 11th of December, and saw the BTC drop back as low as $40,180, as down to a mixture of profit-taking and a wipeout of overly greedy bulls using leverage in the BTC futures market to chase the price higher. But conditions in the futures market are indicative of less overly excessive bullishness, as per CoinGlass, the open interest weighted funding rate of leveraged Bitcoin futures positions was last at a more healthy but still bullish 0.016% versus recent highs on the 9th of December above 0.035%. That sets the stage for a more sustainable short-term price rise with a lower risk of leverage wipeouts triggered short-term price dips. Near-term price predictions are likely to remain bullish, with Bitcoin currently benefiting from expectations of a near-term Fed easing cycle, optimism about institutional adoption with spot Bitcoin ETFs seemingly on the brink of gaining approval in the U.S., and about other themes such as 1. The Bitcoin issuance rate halving in April 2024, and 2. The potential for a more pro-crypto president to get elected in 2024. That doesn't even mention recent bullish technical developments that are likely to encourage chart-focused traders to continue buying/betting on more upside. Bitcoin's dip buying fueled bounce from its recent retest of the psychologically important $40,000 level, where its 21-day moving average also resided, is a strong indicator of resilient demand and exactly the kind of technical price action that would be expected during a bull market. The next major upside target remains the 2022 highs in the 48,200s. Whether the Santa rally that has already lifted Bitcoin over 13% can continue into the year's end and extend to nearly 30% if Bitcoin was to end the year at 48,000 remains to be seen, but price risks certainly seem tilted to the upside. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.